One thing I learned from Jim Rickards is dynastic wealth. And that is wealth that has lasted in families at least 300 years. And it has 3 legs. Makes it pretty simple. Real estate, although that's overvalued right now. Truly rare collectibles. Look at the Queen of England, and gold as the foundation. Now you can do all 3 with gold because you can have a gold mine, you can have gold coins, and you can have, gold rare antiques or rare pieces. But, there's nothing else that has lasted 300 years but those things. And you need to be able to, if you have gold, not only can you accumulate them when they're cheap, but you can maintain whatever you have. The truth always lies in the data, not in what they say. And that takes you back to the cognizant dissonance, because what happens is when people hear all of these conflicting things, their mind can't really deal with that. So they choose something for normalization that they can live with. And who really wants to know the awful things that are happening? I'll tell you a little story. I had this friend, and we were up at the bug out house and we were talking, and she said, yeah, I haven't really been feeling very well for probably about 6 months now. This is bothering me, that's bothering me. I said, well, did you go and get some tests, go to the doctor and find out what's going on? And she's like, no, and I'm not going to because I don't want to know. And that doesn't make sense to me. If there's something that's going on, I go to the doctor every 3 months. I get my blood tests. We just had a meeting yesterday, and she's like, okay, this is great. Adjust this, adjust that. I want to know ahead of time when there's a problem with my health or with my wealth, so that I can make educated choices that puts my best interest first. What we've witnessed since 2008 is that it takes more and more and more of that printing, and they get less and less and less result, because it's all about the confidence. And we've witnessed since 2008, the bank-to-bank confidence was gone, as witnessed by the interbank lending. The central bank to central bank confidence was gone, as we witnessed in 2015 with the Swiss surprise. And we can go into those specifically, but we've just been, and then it was a year ago, last June, when the central bank to the Wall Street crowd, they lost confidence. There's only one level of confidence left. So it's not like you have all of these to go through. We are at the end, and that's the public confidence. And that's why what you brought up in the beginning is so critical, because if you aren't feeling it yourself, if you have enough income that inflation doesn't really impact, whether or not you can put food on the table or gas in the car or buy the things that you want, you think everything is fine. But at that lower level where all of that matters, well, there's a lot of unrest that's happening, and we're also witnessing a lot of creep. In other words, those that are getting hopeless and hungry, creeping into neighborhoods that are not.
Lynette Zang has always emphasized the importance of recognizing dynastic wealth and its 3 foundational legs: real estate, rare collectibles, and gold. As she rightly points out, real estate is often overvalued and subject to significant taxation. Rare collectibles, while valuable, can be challenging to liquidate quickly in times of need. Gold, however, stands out as a timeless asset with intrinsic value that has persisted through centuries. Gold is not just a hedge against inflation. It is a safeguard for wealth preservation. Its value does not deteriorate over time as fiat currencies do. This is particularly crucial in today's economic climate, where inflation is eroding purchasing power. As Zhang mentioned, gold can take various forms: gold mines, coins, and rare antiques. Each form offers unique benefits, but they all share the same inherent stability and value. Gold's durability and universal recognition make it a reliable store of value. Unlike real estate, which is fixed in location and can be heavily taxed, gold is portable and can be easily liquidated or transported. This mobility is a critical advantage in times of economic uncertainty or geopolitical instability. Understanding the value of gold requires looking at historical data. Since the end of the gold standard in 1971, the price of gold has increased from $35 per ounce to over $1,800 per ounce today. This dramatic rise underscores gold's ability to preserve wealth over long periods. Historical data consistently shows that gold retains its value even during times of economic crisis. Moreover, central banks around the world continue to hold substantial reserves of gold. This is a strong indicator of gold's perceived value and stability. According to the World Gold Council, global central banks have been net buyers of gold for over a decade, adding to their reserves to hedge against economic risks and currency devaluation. Zang's insights into cognitive dissonance are particularly relevant in understanding why many people fail to recognize the importance of gold. When confronted with conflicting information about the economy, many choose to believe the more comforting narrative rather than facing harsh realities. This psychological phenomenon prevents individuals from taking proactive steps to protect their wealth. For instance, despite the clear signs of economic instability, such as increasing debt levels, declining interbank confidence, and rising inflation, many still cling to the belief that fiat currencies and traditional investments will remain stable. This denial can be dangerous, as it delays crucial decision-making that could safeguard financial futures. To illustrate this point, Zang shared a personal story about a friend who ignored health issues for months because she feared a negative diagnosis. This is analogous to how people ignore economic red flags. Just as early detection can save lives, early action in financial planning can preserve wealth. Regular checkups, whether for health or finances, are essential to stay ahead of potential problems. In these volatile times, the importance of a well-rounded financial strategy that includes gold and silver cannot be overstated. Lynette Zang's insights, drawn from decades of experience and deep analysis, offer a compelling case for why precious metals are crucial for wealth preservation. Gold, in particular, stands out due to its unique properties: durability, universal recognition, and historical performance as a store of value. Gold's role in a diversified portfolio is not just about its intrinsic value, but also its ability to act as a hedge against inflation and economic instability. As Zang highlights, gold can be held in various forms, whether as physical coins and bars, shares in gold mining companies, or even rare gold antiques. This versatility adds to its appeal, allowing investors to tailor their holdings to their specific needs and risk tolerance. Gold and silver are not just investments. They are essential components of a robust financial strategy designed to preserve wealth and ensure financial stability. By understanding the principles of dynastic wealth and taking proactive steps to diversify and protect one's assets, individuals can secure their financial futures. In a world of economic uncertainty, being prepared is not just an option, it is a necessity. Embrace the wisdom of gold and silver and position yourself for resilience and prosperity in the years to come.
Monetary velocity is the number of times that money changes hands. So let's just say I have a good week and I decide, okay, maybe I can afford that car that I was wanting to buy but was postponing. So now, okay, I had a good week. I'm going to the car dealership. I buy a car. That money is transferring to, say, the person that sold me that car. And that person goes, gee, I had a pretty good week. Maybe I'll take my spouse on that weekend that we were talking about. So now the money changes from my hands to his hands. They go on vacation and it's transferring again. And hey, they go to a restaurant. He's feeling flush. They leave a bigger tip and the wait person goes, well, now I can buy Jimmy the sneakers that I was wanting to buy him. So it's the speed at which money changes hands, and it is an indication of a truly robust economy for a while, up until 1997. Was the last time that debt was actually stimulative in the economy. But ever since 1997, it has been dropping to levels below where it was back in 1933 during the Great Depression. Lately, it has been spiking because there have been a couple of blip ups, but they were not pervasive. They were small blips. Now it is going up in a pervasive way, which is more of an indication that people really realize that the currency is losing value. That's that rapid inflation, right? So they're rushing to spend it while it still has some value before the prices of those goods and services go up. And that's why that major pattern shift in the velocity of money indicates that, for me, the beginning of the hyperinflation. And we are hearing this around the globe, and even in this country, how sticky inflation is, how it's started to move up a little bit. They're playing it down. And I think that all of this good news is about hiding what's really happening.
It's just a distraction.
That would be true for every single fiat currency. I mean, that was true for all these, right? And then some. So what happens when it gets to zero? Well, we saw the monetary velocity chart on just the M2, because of course they took the M3, the full money, away from us in 2006. But I'm seeing a spike in the monetary velocity in a very, very, very pervasive way. This is what I was looking for to indicate the start of the hyperinflation. Well, I've been studying currencies since 1987, and I'm so grateful that I did. You and I both worked on Wall Street for a while, because what you do is you see, there's well over 4,800 currencies that don't exist anymore, and they all have the same kind of pattern, which means that if you understand where we are in this cycle, you can understand what the next most likely thing is to happen, and therefore you can get into position with your investments, with your food, with that whole mantra piece before you really need it. Because I'd always rather I don't care if I'm 10 years too early. I just don't want to be 1 second too late. So the strategy is about what is most likely to help you sustain a standard of living, preserve the wealth that you have to or choose to keep inside of the fiat money markets.
Right.
Get into a position to have that wealth transfer your way as this whole market shifts, so that on the other side of this mess, number one, you've been able to maintain your freedoms and your liberties for yourself and your family and those people that you love, and sustain a reasonable standard of living in the meantime. And on the other side of this, you are in even a much better position than you were entering it. Because one thing I learned from Jim Rickards is dynastic wealth. And that is wealth that has lasted in families at least 300 years. And it has 3 legs. Makes it pretty simple. Real estate, although that's overvalued right now. Truly rare collectibles. Look at the Queen of England. And gold as the foundation. Now you can do all 3 with gold, because you can have a gold mine. You can have gold coins, and you can have, gold rare antiques or rare pieces. But, there's nothing else that has lasted 300 years but those things. And you need to be able to, if you have gold, not only can you accumulate them when they're cheap, but you can maintain whatever you have, because real estate is not something that you could put on your back and move. So that has a tendency to get taxed like crazy. And the strategy really looks at all of that, and it has to start with your goals.
Since the 2008 financial crisis, we have witnessed an unprecedented level of money printing by central banks. Initially, this quantitative easing, QE, seemed to provide a solution by injecting liquidity into the markets. However, the efficacy of QE has diminished over time. Each round of printing yields less economic benefit, highlighting the unsustainable nature of this approach. The diminishing returns of QE are evident in the declining velocity of money. Velocity refers to the speed at which money circulates in the economy. A robust economy sees high velocity, indicating active spending and investment. Conversely, a declining velocity suggests economic stagnation. Recent spikes in monetary velocity are not signs of economic health, but rather indicators of panic spending, as people rush to convert depreciating currency into tangible assets. The increase in monetary velocity and the persistent inflation point towards a more concerning trend: hyperinflation. When people lose confidence in their currency, they spend it quickly to avoid holding devaluing money. This accelerates inflation further, creating a vicious cycle. Historical precedents, such as the Weimar Republic in Germany and more recently Zimbabwe, illustrate the devastating effects of hyperinflation. It's not just the US that faces these challenges. Globally, many fiat currencies are experiencing similar pressures. Central banks worldwide are grappling with how to manage debt, stimulate growth, and control inflation. The interconnected nature of the global economy means that instability in one region can quickly spread to others. For example, the 2015 Swiss franc surprise highlighted how central bank actions can have far-reaching impacts. The sudden removal of the Swiss franc's cap against the euro caused shockwaves in the financial markets, demonstrating the delicate balance central banks must maintain. Such events underscore the importance of having a diversified portfolio that includes stable assets like gold. To navigate these turbulent times, Zang advocates for a strategy that prioritizes wealth preservation and freedom. This involves not only investing in gold, but also diversifying into other stable assets. Real estate, despite its drawbacks, can be a valuable part of a diversified portfolio if carefully selected. Rare collectibles, while less liquid, offer unique investment opportunities with significant potential returns. However, the cornerstone of this strategy remains gold. Whether through physical ownership or investment in gold-related assets, ensuring a portion of one's wealth is in gold can provide a buffer against economic shocks. Gold's historical performance, coupled with its universal recognition, makes it an indispensable part of any robust financial strategy. Maintaining wealth and stability is not just about financial assets. It's also about being prepared in all aspects of life. This includes having a reliable food supply, securing one's home, and ensuring personal and family health. Just as Zang regularly checks her health, individuals should regularly review and adjust their financial strategies to adapt to changing conditions. Educating oneself about economic trends and investment strategies is crucial. Knowledge empowers individuals to make informed decisions that align with their long-term goals. Zhang's experience on Wall Street and her extensive study of currencies since 1987 provide valuable insights that can guide others. In conclusion, the value of gold and silver cannot be overstated, especially in today's uncertain economic environment. By understanding the principles of dynastic wealth and taking proactive steps to protect and grow one's assets, individuals can secure their financial futures. Gold, with its unparalleled stability and enduring value, should be a fundamental part of any wealth preservation strategy. For our American viewers and allies, it's important to recognize the unique position you hold in the global economy. The US dollar, despite its challenges, remains the world's primary reserve currency. This status provides certain advantages, but also comes with significant responsibilities. Diversifying your investments, particularly into gold and silver, can provide a hedge against potential declines in the dollar's value. Additionally, staying informed and engaged with economic policies and trends will empower you to make strategic decisions that protect your wealth and enhance your financial resilience. Remember, in times of economic uncertainty, being prepared is not just an option, it's a necessity. If you want to stay most up-to-date on the silver and gold markets, make sure to subscribe to my daily 5-minute silver and gold newsletter. It provides the latest expert insights, breaking news, market trends, and investment strategies, all in a concise format. Click the first link in the description to join thousands of others and enhance your investment knowledge right now. If you enjoyed this video, please give it a thumbs up and subscribe to my channel. Your support helps me stay motivated to bring more valuable content to you. See you in the next video.